How do you do, ladies and gentlemen? I'm your host, Seth Julian. Welcome you to tonight's session, How to Turn News to Trades. Fairly straightforward topic tonight. Won't take us too long, won't require any notes or calculations whatsoever. It's a sort of sit back and and just enjoy this. It's a fairly easy undertaking. Um, uh, I'm Seth Julian, MBA, registered securities dealer, and the Chief Global Strategist here at Alvexo Trading. I just want you to be aware that CFDs are complicated instruments and come with a high risk of losing money, mostly due to the fact that they're leveraged. 70.2% of our retail investors lose money when trading CFDs, but you should consider whether you understand how CFDs work and whether you can afford losing money. Let me give you this straight though. You should only be getting with money you can afford to lose. There's risk in these markets of things that are reasonably reliable and somewhat certain, and usually all of those weasel words there to indicate clearly we possibly can that it doesn't always go as expected. There's risk here in the capital markets, and yes, you can earn a handsome living, and we do on occasion over time, but we also lose. And you have to be prepared to lose. You can't win in this business without learning and knowing how to lose. So, having said that, let's move on. We do have one protocol in the room, and that is that I ask you to pose your questions directly in this question and answer chat area. Good to see you, Joa. What's your name? Nice to meet you. Nice to see you. Welcome to the room. And thank you, Joe, for I forgot to ask if just for you to recognize to indicate whether you can hear my voice, see the openings, see the slides. But Joe seems to have covered that, and I guess that's good enough for everyone. If Joe does, everybody else does. So we can dispense with that. I just want you to understand also that we're here to discuss things together jointly, like two people sharing a common experience. This is not um, independent investment research, which is what your broker would give you. She would be familiar with your risk appetite, your capital asset allocations, your net worth, your risk appetite. And she would be giving you guidance and financial advice and assistance. We are here just to share an experience and learn together. So I don't want you to think that we're giving out advice for all of you to follow exactly. That's why you're brokers. Also, finally, we offer contracts for difference. These are derivatives. And derivatives, the reason derivatives are traded is because they're highly advantageous to the underlying assets. They're more flexible, they're cheaper, they're more efficient, they're more diverse, and they offer tremendous opportunities. The vast amount, the overwhelming majority of assets that are traded in the world today are derivative assets, and there's good reason for that. But I do just want you to be aware that we do trade the derivatives and not the underlying. But the prices are virtually identical. Now, oh yeah, so please feel free to ask questions as we go, because it really likens the experience much more to a dialogue than a coma-inducing one. So, ladies and gentlemen, news, widely and narrowly defined, drives asset prices. And that may be obvious to you or come as a surprise. But news drives asset prices. In fact, let me before I get carried away, which I can very easily. Let's stick to at least the presentation before we go to some charts and get the general idea. But again, please feel free to ask questions. Be it economic reports that flow constantly, which are relatively unnewsworthy, the exception of the non-farm payroll and perhaps the oil inventory report. There are some that are other than the non-farm payroll. There are some that are marginally influential, but most are not. News events of a one-off basis, like natural or man-made phenomena, those can move the markets, but good. It's always been this way. The first communication over the first transatlantic cable, successfully laid and connected in 1866, was the pound sterling US dollar exchange rate in London, which was cabled to New York. The pair is commonly referred to until this day as cable. So news and the financial markets have a long and intimate relationship. In fact, the financier, the Rothschild, the finance family, the Rothschilds, who were the major, they were the Citibanks and the HSBCs of the 19th century and the 18th century, late 18th and early 19th century, used carrier pigeons to transmit news. So news and the capital markets are intimately involved. Now, we live in a golden age of information. Markets react more quickly to and are generally more aware of and consider future implications of current events, but we also have access to news in a way that, well, I'll tell you, I'm 64 years old. I've been trading for 51 years in the capital markets. And when I started seriously trading, not as a young man, when I was a little kid, a young guy, but when I started to get serious about it, I had to order charts. I had a charting service that sent me the chart of a whole set of assets. It came in the mail once a week. And I would draw my analysis on those charts and hang them up around my office. And that's how I made decisions. When the newspaper arrived that morning, I would plot that data point, those charts, and phone my broker over the telephone line. This was even before them, and get the order filled. And I just have to, it was a fun thing because in those days you got familiar with your broker. What the hell's going on here? Oh, I must have pressed. Sorry, ladies and gentlemen. There's just so stupid. Um, here. Yes. So you used to get friendly with them because you had to wait for the order to be filled. By the time I went to electronic markets and modems and what have you. But I don't tell you that story to wax nostalgic about talking to brokers. I tell you that story to indicate that we live in a faster time. While we have access to more information, the markets react more quickly to that information. So you have to be pretty nimble. So therefore, translating events into positions in the markets is the work of the nimble. You have to be fairly quick, although I don't want you to feel, and I don't want to imply, and I don't want you to infer that you need to jump and be crazed and be manic. That's for the birds. Should never be that. There's no, there's a tendency to think, especially in this rapid electronic age, that if you don't react immediately, you'll lose out. Well, that, as we say, is the wrong answer. It's not, doesn't work that way. If the thing is lucrative, the idea makes sense, if the trade has legs, it's going to stay in trade. It doesn't matter whether you get in immediately or 2 minutes later. Unless it's going to only last for 50 seconds. You don't have to be considerate. Be judicious. Wait, think about what you're doing. Now, the major revisions in economics, think Brexit can be joined for more time than trading breaking transitory news like weather. There are exceptions to that. So we're going to get to. I'll show you the great exception to that of late. Those of you who are clients of the house here and regularly read our signals and our bulletins and all of the products that we publish for our clients will be aware that we did very well out of coffee. Coffee had suffered some. Well, I'll go into that later on. But coffee was one of those opportunities, a meteorologically related series of events that proved to be very lucrative. Now, transitory news, and this is a word that is so often used in the financial press that it's become nearly meaningless, is news that happens once and whose effects pass quickly, i.e. transitory. Now, where does our news come from? The sources for news are nearly endless today. The trick is actually narrowing down the effluvium of data available to our senses and distilling it into information. I used to have I had a professor in business school, an Indian, Ravi Sarathi, who's one of his favorite phrases was, process the data, process the data. What he meant was, and he's explicitly in is you've got to turn the data information into information. Simply having a ton of data is less than worthless, because you're confused. It clouds your vision. It obscures your ability to make a decision. So you have to turn all this news effluvium into actual information. So when we then process that information into actual actionable trading plans, process requires more conviction of our sentiment than depth of analytical thought. Let me repeat that. The process requires more conviction of our sentiment than depth of analytic thought. And I want to dwell on this for a moment because this often escapes, particularly newbies, and shouldn't be. You don't have to be an expert on everything or anything to be able to make money trading in the capital. What you do have to be is firm in your conviction. Believe in what you're doing, and of course, prepare for the worst. So by that I mean, quite simply, and those of you who are regulars to the show know that I say this with great frequency and regularity because it's true. You have to hope for the best and prepare for the worst, and that's done very simply. Again, I don't mean to make this sound like it's nuclear, warfare strategy. It's simple. You take your position based on whatever you've thought about or read, and I'm not talking about technical trading positions, in the moving average crossovers or things like that. I'm talking about news-related macro trades, which I am a macro trader. If it makes sense to you and you get into the position and it doesn't work out fairly quickly, get the hell out. That's your stop loss. Leave. There's no ego involved. You were wrong. The markets are right. Whatever it is, just get out. But if you believe you're right and you haven't been stopped out by the markets, there's still hope for it. Stick with it. If you believe it's right and you haven't been thrown out because you're completely wrong, you need to have that conviction of sentiment because you've done your analysis. You don't have to overthink. So when I say that I, regularly read Bloomberg, The Economist, Foreign Affairs, the New York Times, the Journal, et cetera, I do because I enjoy being informed and this is the kind of business. This is the example. This knowledge is power. If you're aware and you're putting developments of in the world around you, you can very often turn those into lucrative positions. Great business. I don't mean to say in any shape or form that you need to hire advanced training and sorts of unnecessary credentia to be trouble in this business. Any questions, ladies? I see Jamila has a question. What is sentiment? I hear a lot about trading. Well, it's good. It's a good question, actually. I'm sorry. I'm glad you asked. Sentiment, first and foremost, it means what it says. It's and I will show you, Jamila, and everybody else, what it means on a chart. We're going to go to any ordinary. The first one that comes up here is Disney, and I start here on my favorite charting program, which is Trading View. It's a free program. I have a paid account that have just a few more bells and whistles than the free one does, but the free one is absolutely excellent. And here's what sentiment means on technically speaking, Jimmy. Sentiment is to the directional movement of a price chart what momentum is to acceleration in physics. In other words, if a object of a certain mass is rolling down a slope of a certain degree, it will accelerate at a certain speed. That mass increases, the acceleration will increase as well. And that phenomena is called momentum. In trading, when there is a great deal of volume behind a move. In other words, this of course is the decline March 20th, 2020. These charts are all the same all over the world. That steep drop off begins in 2020 is when the plague hits the Western world. And then the steep uptick in many stocks, in the case of Disney for sure, because of the streaming and the entertainment, what have you, as more volume accompanies the move, we say that we actually do even use the physics word, there's momentum behind it, but I don't like that because I never liked the pseudo-scientific veneer always attempted to be pasted onto finance and economics by the trade. It's not natural science. This is human. This is social science, and and so I prefer sentiment. And let me finish that thought actually, because while these charts are designed, they use the same tools that natural science use. Those are deterministic sciences. Those are based on fact and reality, on which we can construct and rely on. They're deterministic. This is not deterministic. This is probabilistic. So it looks like the same tools, but it ain't. This is actually the human emotional attack of the Walt Disney Company stock. Looks America, looks like NASA, looks like the Kazakhstan. It's got graphs and charts and arrows and bullshit. This is human emotion graphed on a chart. Human emotional attachment to a stock. The long answer to your question, Jamila. As the sentiment, as volume rises, with the behind the move is said to be stronger. Here, volume price rises up, the volume remains completely average, i.e., there's less sentiment behind the move. Here, as price gets to fall, we see the average of volume increasing, i.e., more sentiment. So I hope that answered your question. Let's get back to the presentation. Thank you for asking. Now then, for example, the arrival of severe weather at critical times in the growth of crops often results in damaged crops and declines in harvest yield. Under African platinum mines, not surprisingly, had the miners striking. Excuse me, in South African platinum. This goes back a few years, I guess. Not, I'm well aware. It's probably back 2014, 2015. Not surprisingly, had the effect of the prices of the palladium group of metals. Pooling tankers in the Gulf, which many of you will remember off Al Fujairah in the Emirates, frightened traders and raised the price for weeks. There are many such phenomena that will become clear to us as traders the longer we monitor and practice watching the news radar for such visible events. So, and we'll get to those in a moment, what some of those are. But in terms of sources, I want you to be aware of the source. My principal source, I have been reading this for the better of, 40 years or so. I've had a subscription to it just almost forever. This is the best by a country mile. It ain't cheap. It's expensive as a subscription. I haven't received the print version in maybe 25 years, but I just get the digital version, and it's fine. And it's the best. What you read The Economist today will show up in the Wall Street Journal and the New York Times next week. It's the best, bar none. Bloomberg, for up-to-date, late-breaking things, excellent analysis. Investing.com, a common site. You see it on the, many of you have joined us tonight through investing.com. By the way, I don't say this for any, we're not paid to say this. I'm giving you the straight dope here. In fact, we pay some, I pay for these. It's Bloomberg subscription, Economist subscription. So I'm not being paid. This is what I believe. Foreign affairs, if you've got the time, also, again, not cheap. And actually, the Wall Street Journal is very expensive. I don't have a subscription to that. The New York Times, I do have a subscription to. Let me say this about paying. In this business, in the news business, you can pay for. And conversely, don't get what you don't pay for. Yes, we live in a golden age of information. It doesn't mean say all for free. You got to pay. You You buy a computer, you buy your internet connection, you buy charting software, you pay your commissions to your broker, etc., etc. You need to buy information. Now, news, and this is something that a lot of people have difficulty. News is a saga with daily installations. It's a series, a telenovela about which you need to stay fairly well informed. You can fall behind now and then, but closing knowledge gaps is important and possible following absences. Catch up. You don't have to be completely obsessive or neurotic about it. But you do have to stay reasonably consistently up to date. And we need to have a well-rounded idea of the fundamentals of any can. Research in our age really is easy. It is a piece of cake. We have at our disposal the same tools that the wealthiest and most successful traders do. They don't have access to anything you and I don't. You and I don't. In fact, in terms of quality research, I'm not necessarily saying news per se, like The Economist or the New York Times or any other journals, financial, but in-house proprietary research is also widely available. I subscribe for free to McKinsey's reports and what's it called? Alpha. I forget what it's called. It's on my email. I forget it. But there's hundreds of reports that you can get. I don't read them all, but I subscribe to many of them. And when I need to, I look at them for specific information. They're fabulous. The International Energy Agency, free government data, highest quality money can buy. Money can't buy. Those things are free. Scanning the radar is a constant war. It's just part of this business. Just like you have to look at the charts, and I'm talking about people who want to make money consistently over time. If you're here just to, for a little fun, a little excitement, I don't disparage that at all. You're obviously more than welcome in the house. Lots of people do that. It's fun. My brother trades like that. He trades in oil now and then, makes a few dollars, has a good time, but he doesn't really, follow this stuff the way I do. And that's because I make a living at it. He's an accountant. He just does it for the fun of it. And if you're here for that, you don't need to be so obsessive about it. But if you're here to make money on a consistent, regular, long-time basis, you need to follow the news because that is the driving force behind these markets. If, however, you like to be informed, so scanning the radar is a constant chore. If you aren't hooked interested in the news at some level, to the storylines of events, this is going to drive you crazy. And I know that. Some people to this day don't have the full picture of what the hell happened in Yugoslavia and who are the Serbs and who are the Bosnians and what is Herzegovina and what is Montenegro and it's a pain. I fully admit it. It's not for everybody. And Lord knows the misery and vicious destruction that's taking place in the Ukraine. Some people don't really know the difference between Donetsk and Lushansk and where the hell is Transnistria and what is Moldova. And again, you don't really need to know the ins and outs of that, but you surely have to have a fairly general grasp of that if you plan to profit from what's going on on the European outbreak of open warfare for the first time since the Second World War. And I don't count the Yugoslav disintegration because that was a civil war. This is international warfare on the European landmass, and that's happening for the first time since 19. If you like to be informed and want to turn that information into actual actionable opportunities, then this approach could well be worth it. Many times the trades that result from a news item, it's obvious. Amazon, Microsoft, Netflix, Walmart, Alphabet, it's pandemic stay-home trades. It's obvious, right? They exploded with profitability almost within 6 weeks of the massive fall down. And we'll take a look at some graphs shortly, but it's easy. It's obvious. People will stay. 30% of the workforce was continuing to work from home. They upgraded their microphones and their keyboards and their screens and what have you. And some of them even invested more in their homes to make them cozier. And there was money being put in people's pockets, state government, large, et cetera, et cetera. UPS, FedEx following the home delivery boom. In any event, the news is scanned to identify possible trades. Make suppositions. This is what you have to do. That's how you do it. The bottom, I don't like the bottom line's not the term I want to use. The key, the entire process involves making a supposition. Maritime attacks in the Persian Gulf are likely to cause oil prices to spike up. That's a supposition. And again, I caution you because sometimes you're wrong. And I'll give you here's one. Sometimes the trade loss is less obvious. The trade, rather, is less obvious. Intuition and insight can throw some opportunities into relief. Those of you, again, who are regulars in the house or regulars to these broadcasts know we've been very positive on the stock Linde. Linde makes industrial gas. When the pandemic broke out, the demand for medical oxygen exploded. I shouldn't use that term. Oxygen is highly explosive, but it's not explosive. It's flammable. But the demand for medical oxygen skyrocketed, and Linde was a great stock. So it's that sort of those suppositions you have to make for yourself. And no, Barbara. It's if you read. Barbara asked if I read about them in the news. Is it too late to enter a trade? No. Oftentimes the news is a little late. It's not exactly as quick as we can be as traders. But no, it's not too late. For example, that Linde trade was good for 18 months. India suffered. The demand for medical oxygen during the initial stages, the first year and a half of the pandemic were extreme, and the stock did very well. So what I want to do is move from the presentation, and again, it's a good time to ask any questions. I want to move from the presentation and go to some charts and take a look at what's really going on and see what we can derive from news as it affects assets. This chart of commodities, and the issue I'm focusing in on here is the outbreak of war on the night of February 23rd, 2022, in Ukraine. Where is this? Why is this? Oh, it's weekly. Daily of wheat. Here we go. That's it right there. What is that? 15th of February, right there. There it goes. Why? Anybody know? Russia and Ukraine account for approximately 60% of the world's wheat exports. They exports, that is to say, the countries that import wheat, which is practically every country except maybe the United States and Russia, import wheat. Well, once warfare breaks out and sanctions are imposed, those supplies come off the market. When it's such a huge amount of supply leaves the market and demand does not adjust commensurately, well, only one thing happens. The price goes to make the demand for the shortage of supply. Wheat. Where's corn was a great trade. Corn. Same pattern. It's February 20. Skyrockets. Natural gas. Now again, I won't. My point is not to explain why. Those of you who are not aware, basically should understand that Russia has two product lines that it makes money with. One, and those are the only things that they make that the world wants. Nobody's ever seen a Russian bag, Russian shoes, a watch, a Russian car, any item of value at all made in Russia, except weapons, which are okay, pretty good, and natural resources, which they have in abundance. Other than that's all they make. One of the things they export in enormous quantities is hydrocarbons, gas, oil, and other distillates and related products. So gas skyrockets. Oil, where is oil? Um, Brent spikes up. WTI spikes up. Oh, and just something Ukraine war is this. This is the price of coffee. Now, coffee, starting in the summer season of 2021, undergoes a very severe drought. And then, somewhere around the winter time, um, the fall season starts to experience a very severe frost. Coffee was a very lucrative trade. It started to balance out here. And you can see, Jamila, this once the world gets hip to it, the sentiment gets very strong. And you can see it's, the volume is way above average. Here's the average price here, way above average, because it was a great trade and there was a lot of sentiment behind it for good reason. And of course, it moves above its moving average, the 50 and the 200-day move. So what other that's the Ukraine war, the pandemic. You get the idea. Um, Questions, ladies and gentlemen. Thank you, Dan. Thank you for that compliment. I do just want to make you aware of one more news-related series of phenomena. These are the indexes, stock indexes of the world. With the exception of this is the strength of the U.S. dollar, though highly related, and the tadawul, which only is recently to fall off the last 4 days or so. Tadawul has been just almost exemplary, but it started to fall. We are in an inflationary period of time, and if you doubt that, I will just quickly show you this chart of the two bond products we sell: the U.S. 10-year and the U.S. 10-year and the 10-year German government bond. They picked up a little bit in the last week because interest rates are starting to rise and become commensurate. They're starting to attack the inflation problem. They're far from being commensurate with inflation. But the stock market is selling off big. And in this, the market's really late. It's been with us now for, I don't know, better part of a year, 8 months. The Fed was the government, the central banks, as they always are, late in responding, but they're finally responding, and finally the markets are getting the drift. The happy days are over. Hi, Rob. Free money is out. There's an old expression on Wall Street. I don't know. I've heard it described occasionally to Mr. Buffett, but I'm not sure. Although it sounds like his sort of kind of expression. It says, when the tide goes out, we see who's swimming without a bathing suit. I mean, when money is cheap, everybody's looking good. Top lines are bubbly because people have money. Things are cheap and there's money around. There's plenty of money to buy new plant and equipment so you can turn out all sorts of products and services, hire new people. People are wearing $5,000, $10,000 watches on their wrist, et cetera, et cetera. And when the price of money, which is called the interest, when the price of money goes up, those days come to an end. He has to start paying back that money, which is much more expensive. Out goes the $10,000 wristwatch. Out goes all the extra workers and plant and equipment you bought and really don't need because people can't afford the sales anymore. And things slow down. And that's where we are today. So that news has, and those of us who are, I don't mean to, those who were aware of it for it and is it too late to profit buy? Absolutely. So, ladies and gentlemen, any further questions? Really a fairly simple proposition tonight. I hope you understood where we were going. But let's open the floor to some questions if there are any. While we're waiting for the questions to come in, let me just say that for those of you who are clients of the house, As you know, humbled and deeply gratified of your patronage of us as your online broker. And those of you who are here tonight through investing.com who are shopping for an online broker, please consider opening an account with us. We're stand up, forthright, upfront kind of brokers. We don't always make money for our clients. Some of our advice doesn't pan out. We like everybody else, but over the long run, we make more than we lose. That is the sine qua non of this business. But we do the best we can, and I hope that this presentation tonight gives you a flavor of the kind of work we do for our clients and the kind of attitude we have toward them. So, ladies and gentlemen, I see there are no questions forthcoming. I'm going to bring the session to a halt and say, oh, no. Why is the U.S. dollar so strong in times of recession, Joa asked. Because it's the most robust economy in the world, Joa. All the other economies are faltering and faltering significantly, not mildly or not relatively or not transitorily. They're faltering. They're in deep shit is what they're in. And the United States economy is relatively stronger, and the central bank of the United States is relatively more forthright and aggressive. So the money is moving to the United States. I hope I've answered your question, Joe. Is there a website that links commodities to stocks such as fertilizer stocks or MOS, CF data? Rob asks. No, there is not. You've got to follow them individually. There's nothing that, insofar as the Bloomberg or Yahoo Finance may make connections, you following the you got to they're separate asset classes. For example, the connection between rising interest rate and bonds prices is fairly self-evident, and that connection would be relatively available on all your major news outlets, but less so with commodities, Rob. What are your thoughts on the Canadian economy, asks Marzia. The Canadian economy is the U.S. economy, with a little bit more emphasis on oil. As oil goes, at least in terms of the loonie, the currency, so goes the loonie. And the Canadian economy reacts almost in lockstep with the economy of the United States economy, because it's the same economy. America's largest trading partner, no, I think it's China, but they do a tremendous. It's one economy basically. Mexico, China, the United States, and Canada are so highly integrated that they behave virtually identically. Rob says, because we know the commodities will go up in price, then the stocks should go up. That doesn't work that way. The mining stocks, perhaps. The oil stocks, if the oil price goes up, then Exxon's going to go up. And it did. I can show you that in the chart, but that's true. If corn goes up, Monsanto and Archer Daniels Midland are going to go up. Yeah, and they do. So yes, there are stocks that are related to commodities, if that's what you mean. Barrick Mining, the big gold miners, the oil giants, of course. Yeah, there are some. If that's what you mean, Rob, then definitely there are some good, worthy connections. Jamila asks, I'm a new trader. I'm only 29, and I'm trying to learn more about the fundamental aspect of trading. What can you recommend to me? The Economist, Jamila. Invest the money and read The Economist once a week. It'll take a few hours, but it's way cheaper than an MBA. It's way faster than a degree in political economics or international trade and economics, and it's the best advice I can give you to answer your question. Why is the Bitcoin descending so fast of value? I'm a newbie and a student. Thanks, says Leonardo. Well, first of all, you've got to keep in mind that its descent is within the realm of familiarity in terms of the tremendous volatility in the crypto markets. The crypto markets are about as volatile as any asset class that ever has existed. And so this sell-off that we're looking at now in the screens in the stock markets is pervading all markets, except a little bit with the bond markets, but that's fairly recent because the bond markets had the shit hammered out of them for months and months and months. So some money is drifting back into the bonds, but it's leaving the stock market in droves. It's fearful, and it's leaving the crypto markets too. It's also fearful. People are going to ground, meaning, excuse me, meaning they're holding more cash. So that cash comes from liquidating assets, some of which are, a lot of which are crypto. Okay, my pleasure, ladies and gentlemen. So if there are no more questions, then just let me say that on behalf of the staff and the management here at Alvexo, I'm your host, Seth Julian. Oh, wait. There's one more from Dan. There could not be sense in developing a dedicated automated tool, even for the crypto market. What's a dedicated automated tool? Automated trading tool? Dan, is that what you mean? Because that's what you mean in an automated. There are a zillion of them. They're all worthless because they're just programmed. And there's no program yet built, yet devised, that will even come close to thinking or teaching you how to think about the way we thought about it tonight. Its decisions on biased information out from the source. No, you got to read and you got to make your own decisions. There's no, I don't believe in the automated. I don't know anybody who's making money with these automated trading. It's not worth my time. Certainly, I doubt it's worth anybody's time. But but there are plenty of them around. Plenty of robots around. They're everywhere. How do I know if a trend reversal is short term? Riyadh, that's a subject for another discussion. We have plenty of setups on that. You can find the answer to that all over the place. But I'll decline it now. Hi, I missed about 15, 20 minutes of the webinar. Is it possible to receive a recording? Asks Brandon. The session is being recorded, Brandon, and within an hour or so, an hour or two, you'll have a link to the recording. So, ladies and gentlemen, this is my last and final goodbye. On behalf of the staff and the management here at Alvexo, I'm your host, Seth Julian, wishing you all, ladies and gentlemen, the ability to trade with confidence. Bye-bye for now. Thank you, Brandon. Thank you for those kind words. I appreciate the compliment very much.